So now the time is 12 o'clock noon, and welcome to this event with Qlife. And the topic for today's event: what happened during Q1. With me today, I have the CFO from Qlife, Kasper Rosø, and just some practical info before we start the event. Welcome to the audience. Thanks a lot for participating in this event. If you would like to post some questions, please do. You see a chat box just under the video window, and you post the questions and I follow up them to Kasper during the presentation. With that said, I would like to welcome Kasper. Please take us through the presentation, Kasper.
Thank you very much, Claus, and welcome to all participants. We are here to present the interim Q1 report that was released this morning, and I will jump right into it. So I think that, how do I make a change here? That worked now. Sorry, I had deselected the window. So first, when we look at the income statement, you will see that our revenues are significantly down compared to before, so 123,000 kroner. And this is basically because we now finally stopped sales of our SARS-CoV-2 tests in Q1, and you would also see that we have sort of taken out all inventory related to that. Also, that was already done in Q4, which is the source of the rather high operating expenses that you see here. But the good thing about this is actually that now we are starting to see the effect of the cost reduction actions we have taken both in last year and some also this year. So we are down 33% on the normalized OPEX spend compared to Q4. And we will also see that if we compared our EBITDA to the normalized Q4, and normalized is basically the inventory write-down that we have adjusted for. So it's operations without inventory write-down, since that was exceptional, around 9.5 million actually. We are 4.8 million better than Q4 also. So we still have actions in place that we haven't seen the full effect of. So we would expect to come even further down in Q2, but already now we are seeing significant cost reductions, and which is both the effect of, as I mentioned before, the fact that we're no longer supporting the SARS-CoV test, but also the fact that we actually completed the development of our CRP assay and the upgraded Ego device and our filtration unit for that, and launched that in the market. Revenue from that will be very limited in the beginning, since it's a new market, and we are primarily focusing now here on validation cases that has the ability to scale later on. Don't expect huge jumps in revenue going forward without announcements of partnerships that we are working on right now to precede that. If you see the split of the revenue, then it's Sweden and the Netherlands, which means also that, which we'll come back to a little later, that our sales to agent in Finland is not happening anymore, and that relates to the arbitration case that we will cover a little later also. Then I will move on to the balance sheet, and as you can see, there is a continued increase in our R&D, so which is what drives up the intangible fixed assets. So the capitalized R&D, we are still adding to that. Then when you look at the tangible fixed asset, there is an increase there. That is, I would say, technical in nature, in the sense that there has been a rent adjustment on our lease of offices and a lab space in Ballerup, and that means that the right to use the asset has increased, and that's what you see there. Then there is an increase in the short-term liability, which is driven by a bridge loan and an increase in accounts payables also. Total balance sum is slightly down from 192.6 at year end to 190.6 million end of Q1. If we then look at the cash flow for the period, then we had a total cash flow from minus 12 million. We had 5.3 million in positive cash flow from financing, which is from the bridge loan that I mentioned before, and with interest and leasing spending deducted. And we end the period with a cash of 2.485 million kroner, which is means that we are very happy to say that we already before the end of the quarter could announce that we had secured a rights emission 100%, which you also can see here when we come to the significant events. So given everything, we are extremely happy with that rights issue that we got it guaranteed 100%. Then furthermore, we had during the quarter some development in regards to our discussions with Adyen. They have basically asked us to pay unpaid invoices of 0.8 million euro. Those are already registered in our released financials on the balance sheet. So it's without any discount. So they're fully reflected in our liabilities. We, on the other hand, have a claim against Adyen for their unmet minimum purchase commitment under the distribution agreement we signed with them of 2.2 million euro. And that is a contingent asset as such, so not included in the numbers that has been reported, only in a note. And the happy sort of involvement on this is basically that the Finnish arbitration institution has accepted our counterclaim to be settled in the same proceeding as the claim from Adyen has against us. So and an arbitrator has been nominated and agreed upon between the two parties. So now we are just waiting for the arbitration to be scheduled so we can see when we get an outcome of this. Then following Q1, we also completed the rights issue. So the cash is in the bank now, and the bridge loan has been paid back. So now we are ready to operate again. And finally, then we have, I just wanted to highlight to you that actually our TO2 warrants exercise period is coming up. So from the 7th to the 21st of June is the period exercise period for these warrants that allows purchase of the share with a 30% discount relative to the average share price in a 2-week period prior to the exercise period. And that is basically what I wanted to say here. So
what would you like to watch?
Sorry, Siri just interrupted here.
Okay. That's okay. No, thanks a lot, Kasper, for taking us through the Q1 outcome. So to the audience, please post your questions. We open up for questions. I could start up slowly. So you got around 57 million in proceeds from your subscription, and then of course you deduct the loan from that amount. Could you elaborate a little on what you're going to use the proceeds, the net proceeds for Kasper?
Yes, certainly. So that is primarily on promoting the through partnerships the CRP as a to the market. So we are sending out. So working with different partners and yet to be disclosed, I would see but so we have seen keen interest here. So basically, it's developing the commercial case for the CRP assay, and at the same time we are working also towards a regulatory approval. Again. This is something that we are taking a different approach than we had before. So we are working more with partners in this in order to do it with a slower cash burn and a lower expenditure to the company. And not so and that has been sort of that retake on things has taken a while, but so that's what we are going to work on. So pursuing the right partners to take it to the CRP to market at scale, and then also working on down the regulatory path at the same time.
So to broaden out, of course, the exposure of your ego device and,
yes.
and the assays. So, but you mentioned in your presentation you have an upcoming run program kicking in. Could you update us a little on that, and whether we are going to see other run programs expiring during 2023, because that would add extra proceeds to you, so you can be
yes. So we got exactly. So there is this TO2 program, and then there is the rights issue that we just closed has a TO3 warrant attached to it that is has an exercise in Septemper.
Okay.
And that gives an option to purchase the share at 0.11 Swedish krona a share, which compared to today's share price of 38.7 years is seems like a pretty good deal. So we hope that we can excite the market about what we are gonna happen in the period until then. So and then there will be a good deal to be made for the people that signed up for the rights issue.
Yes, thanks a lot, Kasper. Then let's dive a little into the CRP and the home testing market. So it's quite complex. I know that you told me that before. There are several pillars that you're going to address, and of course the CE marking is opening up a broader part of the market. But you mentioned in the beginning that you're working on partnerships. Those partnerships, are they in the two addressable markets, the Netherlands and Sweden? And two, what other markets and partnerships are you looking into?
So first, I need to correct you a little here, because the addressable markets are not Netherlands and Sweden for this. Actually, so Netherlands and Sweden is where we have the last sales of our COVID tests.
Okay, good.
Actually, we see sort of the short run, the most promising markets in terms of having for the non sort of regulatory approved, so the wellness product that we have right now is UK and Ireland, and there we are talking to partners that will basically just bring this to the market there. Then we have also partnerships that are sort of in a research use context, will be able to start working on settings where a regulatory approval will ultimately be needed also. But and there we can find ways that actually helps us achieve the regulatory approval at the same time. And that's outside of these markets. And then we have some international interest for this also, that we also pursuing. So I think that the team here is quite busy actually in terms of pushing these initial contacts and partnerships to the next level. And then I can mention also that we will be attending the American Association of Clinical Chemistry's annual congress in Anaheim in late July also, with a demonstration of our product there.
Thanks a lot. So you mentioned the wellness market. So that's the market, the segment of your total addressable market you're working on right now. Could you elaborate, or do you have any figures about growth rates and size that you can share with the investors?
I don't have it at hand here, I would say, and at the same time, this is a difficult question. So they are not readily available. We are working on the best way to substantiate that. We see sort of an overall increase in this market, but we are still just debating exactly what segment of the market it is best for us to compare to, in order to get a fair compare.
Yeah. So in that sense, there's a question here about market shares. That's maybe a little premature, because the markets are huge, but you also have to define what part and.
Yeah, basically, I mean, I can say that there isn't a market right now, a mature market for home testing, as it is here, or in clinics either, because so what the ego is doing quite differently is the fact that because of the usability that has been built into the entire system, it can be operated by non-medical professionals, so and outside of a lab environment. And that market, it doesn't exist in the sense that there are no other devices that can be operated by non-medical trained personnel outside of a lab environment.
No.
There we are quite unique actually. So and hence the need to do these commercial or validation cases and proof of concept setups. The good thing is that we see good interest for this, but there is not a market there that we already can take, because we will own that once we're there.
That's quite interesting. And you know, maybe you could just very briefly, Kasper, touch upon the macro drivers though for your ego health system, because there's other players there, but you're quite unique in terms of the device you have in the background, and the whole system connected to the device.
Certainly. So the macro drivers here that is quite. We see basically in the entire Western world that the health systems are overloaded, and they are struggling finding out how to cope with the increased demand as more and more diseases can be treated, and the populations are aging. And today actually getting access to lab tests is quite expensive in terms of resources used both to transport patients and to transport samples afterwards to laboratories and communicating results back, and all these all this cost is being significantly addressed by us in our setup, since the ego device goes to the patient instead of the patient moving to the lab or the hospital.
And Casper, just very briefly, if you compare to a laboratory test, so you go and you get your blood sample. They send the blood sample either at your doctor's place or hospital, something else, clinic. They send it to the laboratory, and they examine it, and they get the result, and they get back to the doctor, tell him what the result is, and then the doctor contact you as a patient. It can take a week or longer, but just tell us very briefly, how fast is that compared to the normal way with the EcoHealth platform?
So EcoHealth for the CRP test, it will take approximately 10 minutes to get the result, and it will be on your phone. So from you initiate start doing the test, then it will be a 10-minute wait, meaning that in a clinical setting, for instance, if you need to advise a patient about and because this is basically where we see since this getting to the home user, it takes even more marketing. So that's why sort of we for the early cases here are targeting dietitians and health coaches, and they can in sort of doing a consultancy, basically run this test with the patient, and they have the result while they are doing something else in 10 minutes, and can act on it right away instead of having to wait 2 or 3 days until there's a result back from a lab.
Interesting. And so there's a couple of good questions here about the partnerships and the CRP. Would you expect any partnership deals to be signed in the near future? And near future is what, 6 months or something like that? I know it's a hard question, but I also know you're really working hard on, of course, showing something to the investors.
It's hard to say whether I can say that we are working on doing that. I would but whether I expect it or not, it's certainly like a possibility, I would say.
Yeah, and it's important to emphasize here that it's not like you're only working on one client. You have,
exactly.
You have several leads. And what kind of profit sharing revenue agreement are you looking into? Are they different from Ireland and England, or are you more or less offering the same type of revenue sharing with a potential partner?
It is so. It's some of them are revenue sharing in terms of specific markets. They are also we basically have very many different ways of cutting the value chain in these partnerships. Some of them are the outcome for the partner is something that actually doesn't interfere with our revenue at all. So they're very different models. But for instance, for distributors, of course, there will be a revenue sharing in the sense that we sell to them and they take their deal of that. So that's one set of partnerships. But they are also sort of more integrated setups that we have on the roadmap right now, where the value that the partner gets is not in terms of a piece of the revenue, but something else.
Yeah, because you can actually buy the CRP assay you have in the background. You can buy that online. Yes. And you could buy the device and the plasma unit and stuff like that, and start up doing it yourself with a subscription. That's if you do trade with you business to consumer or that sense. But you're of course looking into a little different model when you do partnering.
Basically, yeah, we can see that our knowledge about online marketing is such that to get to significant volumes through our online store would take heavy investments in marketing with funds that we don't have right now. So some of the partners we're looking into is people that own a specific market, a well-defined market, and they take the product there. And there we are targeting people that has access to these advisors and dietitians and health clinics through their existing business actually, and they are actually in the markets that I mentioned before, actually showing keen interest on this.
Is it fair to say, Kasper, that let's say you have a partner with 10 nutritionists in the market, in their addressable market, that you will actually offer the device for more or less free, and then get a revenue stream from the assays?
That's not what we're doing right now. So right now we are taking a price, so asking people to pay for the device also.
Yes, okay.
But it's clear in these settings that the interesting business case here is of course on the tests and getting more tests done, and that's for first of all because the appetite for tests on through health advisor is expected to be rather large actually, so that will be ongoing. So it will be a known revenue stream also that's pretty easy to predict, and also as we move on to volume in our test capsules, we can see that the price, our projections is that the cost price of the test capsules will drop significantly, and it will go way below what our PCRs or COVID test capsules were, because for those the chemistry that went into those were extremely expensive. For CRP it is very cheap actually, so there it's just getting up to volume, so that the molding and the plastic parts of the capsules come down in price. And if you look at the product, you can see it's rather simple. So once that we have the tools, invested in the tools, and we start getting volume on those, then we can produce at a very different cost level.
Thanks a lot, Kasper. Well, there's one final question here about competitors. Who is your closest competitors? And the guy who's asking the question here is mentioned a Danish biotech company called BioGates. They do some biomarker tests as well. And then Omron from Japan, they're doing some health monitoring. Are you seeing these guys in your market, or are you seeing other guys?
So as mentioned before, I think the only ones that have a product that actually can test at home with a device is and be operated by non-trained people is Q Health, and they have, as I can see, basically have invested heavily in COVID tests and are now stuck there with a huge and very expensive infrastructure that they are struggling to cut back, while they in the US regulatory market is struggling to get the next assays out there. So the others, BioGates, for instance, their device is for lab use. It's not something that can be operated at home. So we are quite unique, and it's also important to understand that our device would not go into a lab, because it's the throughput in terms of number of tests for one device is not big enough. So it's not made for volume testing. It's made for distributed testing close to the patient. So it's a quite unique selling point there.
Thanks a lot. Well, I don't know if there's any further questions just before we finish the presentation here. Doesn't seem like that. Do you have anything other, Kasper, to add? Interesting stuff that happened after the event, or you can share with us?
And no, I'm looking forward to report back on some of the things that we are not far enough yet for us to disclose, but hopefully there will be more from us soon. there's a lot of exciting stuff going on. I can assure you.
That's good to hear. That's good to hear. Thanks a lot, Kasper. Thanks a lot for answering all the questions, and thanks a lot to the audience for posting a lot of good questions and spend some time with us here today. So with that said, I will close the event and hope you all will enjoy a long weekend, at least in the Nordics. So Kasper, thanks a lot, and the audience, thanks a lot. By that said, thanks for today.
Goodbye.